Hello, everyone. My name is Incha, Head of APAC Products and Support in the Investment Intelligence Division. This is part of NASDAQ ongoing investor education effort for the APAC investors, and today I'm going to share with you about the understanding of the depth data in the US market, part 2. Just to recap what I've covered in part 1, I've shared about the US market structure and why it is important to have some insight of it. Essentially, there are 17 trading exchanges in the US market, and trades can occur both on and off exchanges. Only the on-exchange trades are in consideration for the depth data. I've also shared on the US trading sessions and that the majority of the trades occur during the regular trading hours, more than 90% of the market. The regular trading hours also exhibit the most tightest spreads, and I've also highlighted that trading in the pre and post market is riskier due to low participation and price volatility. But today, I'll be covering part 2 of this series, which is the understanding of price formation and depth share, as well as some key metrics and insight. Understanding price formation and depth share. Depth of book is important because it provides insight into true demand and supply for a particular security. 3 separate measures of price formation help investors understanding the depth of book. They are namely inside the NBBO, within 1% of the NBBO, and lastly, within 10% of the NBBO. What is NBBO? I mentioned this in part 1, and that's the National Best Bid and Best Offer. Firstly, inside the NBBO or better. Price improvement occurs when a buy order is executed at a price lower than the best offer, or a sell order is executed at a price higher than the best bid. In other words, better than the NBBO. Using both NASDAQ and NYSE Arca cumulative depth share data as the universe of depth data for the market, the chart above shows that on NASDAQ, using the Russell 1000 component stocks, NASDAQ depth share is 64.1% compared to 35.9% on NYSE Arca. This means price formation for prices better than the NBBO are contributed mainly from NASDAQ market depth. Next, the depth share within 1% of the NBBO. This is a leading metric that indicates the quality of the depth data. Using the same component stocks of the Russell 1000, it shows that NASDAQ TotalView, or its depth data product, has over 68.3 depth share based on volume of the depth orders, while NYSE Arca has only 31.7 depth share within 1% of the NBBO. Again, this means that the price formation for prices within 1% of the NBBO are contributed mainly from NASDAQ market depth. Lastly, the metrics within 10% of the NBBO. What value, you may ask, can the depth of book data provide an investor if those orders are less likely to get executed? The answer lies in technical analysis. A technical analyst looks at charts to determine key support and resistance level within the order book. Support and resistance level within an order book are typically large orders that act as major indicators of supply and demand. They can also indicate a trend reversal. Most of the liquidity within 10% of the NBBO exists on NASDAQ depth data and not in NYSE Arca. NASDAQ TotalView provides a level of granularity in the market depth data, which provides insight into the prices away from the NBBO, as well as what market may do in the future. During part 1, I shared about the spreads of the Russell 1000 component stocks. In this slide, I've included the average spreads of NASDAQ 100 component stocks, S&P 100 component stocks, and the Chinese listed stocks in the US market. As you can see from the slide, each of the other 3 component stocks, the average spreads exhibited on NASDAQ trading system is tighter than that from NYSE Arca. I mentioned previously that tighter spreads begets trading volume. True enough, this is exactly what we see in the same component index stocks and the Chinese listed stocks in the US market. NASDAQ trading systems provide the most traded volume across the 3 index component stocks and the Chinese listed stocks. To conclude, Nasdaq TotalView, Nasdaq proprietary debt data product is the best-in-class debt data product in the US market. I hope that over the last 2 sessions, you have gained more insights into the US market, especially the understanding of the debt data and how it could potentially empower your investment decisions. Consult your investment advisors or broking firms about the Nasdaq TotalView debt data product. With our best-in-class debt data, you will be able to better empower yourself with the right investment decisions. Lastly, if you are looking for more content on the US market, feel free to visit this website. Thank you.